Hi, I am Mandar Joshi from BG and Company, a CA firm in Mumbai. Today, I am going to speak about the Union Budget which was announced by the Finance Minister of India on 23rd July 2024. It was the first budget after the general election which happened in 2024. So, people had quite large expectations from the budget. Now, we will see some of the key points which can be extracted from the budget and which are beneficial for the general public. Number one, this budget amended the new tax structure and introduced some new tax slabs in place of the older ones. New tax regime from financial year 2024 will read as below. Up to 2.5 lakh rupees, there won't be any tax. 2.5 to 5 lakhs, 5% is going to be the tax rate. 5 lakhs to 10 lakhs, 10%. 10 lakhs to 12.5 lakhs, 15%. Income from 12.5 lakhs to 15 lakhs will be taxed at 20%, and income above 15 lakhs will be charged at 30%. This change will bring quite a positive relief for middle class taxpayers. The new slabs provide relief to middle income earners. For instance, an individual with annual income of 9 lakh rupees would now pay a lower effective tax rate compared to the old regime. Simplified slabs without exemption make the new regime more attractive to taxpayers who prefer lower rates and straightforward filing. Another important amendment which came in the form of capital gain reforms. There has been a major reform in capital gain structure. The government abolished the indexation system for long-term capital gains and instead rationalized long-term capital gain calculations by reducing the tax rate from 20% to 12.5% for long-term capital assets. Now, this has got a very mixed impact on the long-term capital gains henceforth. Of course, this rate has been reduced from 20% to 12.5%, but it also means that the tendency to hold the asset for like 10 years or 20 years will now be reduced to merely 4 or 5 years, because in long term the amount of gain will be higher than the amount of gain which will be earned in 4 or 5 years. There is no change in short term capital gain though. Another important change which will please the salaried employees is that standard deduction slab has been increased from 50,000 to 75,000. That means a common salaried employee earning, let's say, 7.5 lakh rupees per annum will be paying tax on 6.75 lakh rupees instead of 7 lakh rupees as earlier. That is a very positive change. Increased deduction on NPS contribution. Now, the union budget allows employers to contribute 14% instead of 10% to the NPS investment of the employees. So that means it will encourage higher contribution to NPS, enhancing retirement savings. For an employee earning 10 lakh rupees, deductible contribution will now be 1.4 lakh rupees instead of 1 lakh rupees as earlier. The union budget also proposes to improve the e-filing system by introducing automated pre-filled returns for the salaried employees and individual tax filers. It will minimize the manual entries and human intervention and thereby minimizing the errors. And finally, faceless tax assessment. The government is emphasizing and encouraging faceless tax assessment instead of in-person hearings and in-person assessments to curb and to mitigate the corruption or wrongdoings in the process of assessment, which is another welcome change in this union budget. So these were the important changes which were brought by the Union Budget 2024. Hope you learned something new today. Mind your money.